Okay, guys, we're back again, and I just want this to be quick. I just want to explain change of character, how to find a valid demand or supply zone, and also how to know if a market actually broke a structure. Then also protected highs or targeted highs and protected low or targeted low. This is just a few of what I want to talk about now. Okay, so let's go back to this present trade, and I want to use this part, or probably let me go to another trade. Let me use something different. Let's go to USD JPY. This is actually another system. I haven't touched this analysis at all. Let me see. Remove. Want it to be there. Okay, so let's go down to daily, so that so let's start with what we're starting with. Let me write them down. We're starting with Choch, change of character. EMS, break of market structure. Targeted and protected. Then valid supply or demand zone. Okay. I want this to be in black. Good. Just drop. Okay. Background in white. Yeah, it's okay. Okay, so these are the highlights. Let me make it like this one. This shouldn't be one. One, two, three, and four. Okay, so here we are. So let's start with the first one, which is the change of character. What does change of character means? Change of character simply means the change in the trend of the market. For example, this market from here, this is on a daily, you can see this is about some days. This market has been trading upward from here, has been going up, retracements, up, retracements, up. We are assuming this to be retracement, but market now disobeyed the fact that this low doesn't have to be taken out, because when market is trending upward, the lows are always protected. It's only when market is trending downward, that's when the lows are targeted and the highs are protected. So in that sense, this is what we call the break of market structure, is when a market is trending up, breaking new highs, or when a market is trending down, breaking new lows. So this market is breaking highs, is the one creating the highs and still breaking it. So we were expecting this high that was created to be broken, but market failed to break that high. Permit me for all the message that's coming up on my WhatsApp. I connect my WhatsApp to my laptop so I could easily react to people. So good. So let's just focus on this uptrend for the explanation first. So this market trends retraced, broke the high, retraced, still broke another minor, or what did I used to call it? Premature high. This is something like a premature high, and it took out this low as a liquidity and break this major high again. it does the same here, took out this low and breaks this major high. Then we are expected that this low should not be broken. As this low has not been broken, this major low has not been broken. So that's what keeps the market trending. Now, when we now find this low being broken, then it means the market has changed its shift. On a trend line base here, market has really fallen out of the trend line, which signifies the first change in trend for trend line traders. But for smart money traders, we might still be looking for bullish, because we might still see some demand here. We might still see another demand here. We might see a major demand here that market might react to, or probably market is coming back to this major demand here to pull up. But until this guy gets taken out, that's when we now realize that, oh, things have really changed its direction from bullish now to bearish. So what we will be looking for here now, we'll be looking for sell opportunities. Okay, so how do I now know where my Choch is going to be? So I'm going to follow up on my latest immediate low. This is my latest immediate low. Why? Because this low took out this liquidity here. This is the liquidity here and broke this high. Normally it's supposed to break this high, okay, but because it's a single candle, the move might be a news. It broke this low and broke this high before passing to the upside. So for me, this is my protected low, that I know that if price comes here, price shouldn't break this low. Okay, so I write protected under it. So if price should break this low, then the price has changed. That's when I will now turn this from protected low into a Choch. So I will now assume this place is a liquidity that has been taken. Then this place now becomes my Choch, because this was my immediate low that pushed price upward, and I'm expecting price to retrace down to this zone and buy up this candle. Still, I'm expecting price to come to this candle and move up, but price tapped into it, moved first, second, and third, and it broke it. So this is where the Choch starts from. You can also do this on a lower time frame. I'm just using daily for an example so that I can see the candle very clearly. Okay, so this is my Choch here. So let me look for my own Choch here also. Remember, in this market here, we are trending downward. So let me use my trend line here. We are actually trending downward here. Okay, good. We are trending downward here. So let's zoom in. Okay, so as we are trending downward, we are breaking lows. So let me start highlighting the lows. This low was first created and was taken out here. Then this low was next created and was taken out here. This one was created and was taken out here. This one was also created and taken out. So I'm expecting this last low to be taken out. But what did the market do? Market didn't take out this low. This is the immediate high and this is major high. So immediate high or premature high taken out, then major high taken out. This signifies a change of character. So I'll measure this as major Choch, right? Then here would be my premature. Okay, so here would be the liquidity zone, the last man standing. This is my liquidity zone. This guy took out liquidity. to the downside and break this premature high. So which candle am I looking at? I'm looking at the last candle that took out the liquidity, this guy here. So I have two candles to look out for. No, not that one. This red and the tail of that black. Okay, so when I zoom out this, I'm expecting to buy inside this zone. Okay, you can see price didn't really mitigate it though, but if you go down to a more lower time frame, you see why price didn't mitigate. Instead, price indicated something else. Took out this liquidity and it's heading up. So this is my liquidity zone. This is my premature chalk, and this is the major chalk. Why is this the major? Because this one took out this high before falling. So it took out liquidity and it broke this low. So you have to be conversant with the liquidity taken before breaking of structure. So say this guy took out this high, yeah. So I am so much protected with this zone that this zone should not be taken out if we will still continue to sell. But if we continue to buy, sorry, if we still continue to sell, this zone must not be taken out. So I'm not expecting this to be taken out yet to signify that you are still bearish. So maybe we can come around here and still sell off, but I'm not expecting it to be taken out. But the moment price takes this out, damn, this is a valid change of character. So where should I look for? I have a very impulsive candle here with this small guy here, so I might choose this zone, but better still, this is the last man standing that took out the liquidity. The zone I'm picking, I've also digressed a little from major choke now. I've talked about targeted and protected, and I'm also talking about valid um, demand blocks because everything is in between each other. So this guy that takes out this liquidity here, this last man standing from the high to the low, and the low falls on that black candle. So I have to use the high of the red and the low of the black and zoom it out. This is where I'm expecting to buy my zone. You can see that price didn't really mitigate it. So for people like us that looks out for 50% of this zone to buy, we might not get a bullish interest in here, but still what we can get is this. Price took out this low and took out this high. So this signifies to us that we are no more bearish from this trend, we are bullish. So what are we looking at? We're looking at this last man here, last bearish candle here to buy from. So we might be in the long here. You can see we might be in the long there since Christ already created, but you can see how many days it will take. We might not be patient enough to be in this trade, and this will be our target. So I didn't mean to change that. This will be our target. So we might possibly not be in that trade because this is a daily time frame. Most times we might be in 45, 15 minutes. We might not be able to hold this trade this long. Only if we have a daily view of it, then we might be able to hold this trade this long. But this would have been our major entry, but price didn't mitigate this zone before creating a demand, a change of character. So this is my chalk. Yes, this is my liquidity. So always look out for this liquidity first, because the candlestick that takes out the liquidity and this at the same time change character, it has to take out liquidity. If I'm using pin to draw it, look at this from here to here, down here and down here, before price came back here, we are heading up. So if I use line to explain this, let's bring out this line here and push it here. Let's see how it looks. Okay, so what do we have? We have a break of structure here, right? And the liquidity here. Then, as I used to say, my zone will be from here down to this place. Here. Here, good. My zone will be here. Then I'll be ready to buy. If price retraces down here, I might look for my 50% good. If I don't look for it, I might just look for something that is easier, the other block that I can validly see, but it has to be the other block that broke this low before pushing to break this side. So the guy that did that deceiving is the guy that I'm interested. We can actually see industrial candle. We can probably not see. We can either see a bullish engulfing candle, whichever one we see. Just identify it, mark it out, and get in. It's a 50-50 chance, so don't be extremely 100% sure that this what it should work. Don't be. The market can change. The market can kick you out and still go your way. So, but you have to be proactive. When you see it, take good use of it at the right time. So let's go back to the topic. We've talked about what was it? Okay, change of character. So break of market structure. Now let me enter break of market structure. What determines the break of market structure is the trend. The trend determines the break of market structure. The direction the market is breaking to is the trend. So, how do I identify this? I identify it by simply checking if the market is breaking highs or breaking lows. Here, the market pulled up, retraced, and break this high. So, this becomes my first eye. So, I can indicate with a dot here that okay, this high has been broken. This is the low responsible for the high before it created another high here and created another low here that breaks this high to this top and created another low here that breaks this high up to somewhere around here and created another low that breaks this high up to somewhere around it before we have something else from here that started changing here and here. So my focal points are my high and lows. That gives me a description of what the market is actually doing. So you can see how the trend moves from here. This is the high, this is the low, this took it out. So this low now is where I'm looking to buy from. But market didn't come back. The market indicates something else. Here was taken out to form a demand. Here and taken out. So there's another low that pushed up. There's another low that broke there. So all these lows are breaking highs. When lows are breaking high, it tells us that we are in an uptrend or a bullish market. So I'm looking to buy from the low. But when highs are breaking lows, that means we're in the downtrend. I'm looking to sell from the highs. Okay, that's just the break of market structure. So you should be able to put up a line to indicate that this market is actually breaking highs to signify. Most time what I do is I write BMS buy. Why? Because we are buying up, we are going up. So it tells me, even if I forgot that, okay, we are buying up. But once I see BMS buy, it means, we are buying. And if you are selling, I write it there, BMS sell. So that I'll be able to know which trend we are in. BMS sell. So I got that. Most times I like to use red for BMS sell. So it tells me that, oh, we are selling BMS sell. So we are selling at this side. We are buying at this side. Okay. So targeted and protected low. Targeted and protected low means that whatever trend we're in, either the bullish or the bearish, something is protected and something is targeted. One zone is protected and one zone is targeted. So which one is protected and which one is targeted? In a bullish trend, lows are protected because market don't come back to take out these lows unless it creates a demand. Yes, unless it creates a demand. This low was taken out because a demand is needed to push price out. Why? This low failed to push price longer. So it has to be taken out. So this high becomes protected in this case. And it pushed out, it take out this low to make a demand around here before the demand pushed further to take out the high. It doesn't affect the the trend we are coming from if we take proper understanding of it. If you go down to a lower time frame, there will be a lot of supply here mitigating each other before this low was taken out. A lot of people will think that okay, we are still selling down to probably taking out this, because I may also think okay, this is the sell now. We are coming down to this demand zone here to buy up. Yes, this candle here, let's say this candle here, we are coming down here to buy up, and market didn't come. Market didn't come for this demand here. Instead, market just took out this high and push, market moved. So, but we need to understand the face. We need to understand what is possible and what is not possible. So, this seems to be a liquidity that was taken to push market further because this low refused to push market further and allowed supply to break it. So a lot of buyers here were taken out before the real movement started to happen. So this becomes a protected low. So I'll indicate by saying here, which one did I choose now? Here is my protected low, and here is my targeted high. So this is how you label protected and targeted. So I need to color this, make this a little bit, not saying this. Okay, good. 34. Good. So this helps me try as much as possible not to overcrowd your chart there, but it gives you a direction of what is going on. The moment this low broke this high, I label it a protected low. Okay. So next target will be where? This high. So this high becomes the next target. So what I do is I duplicate this so that I can continue my trend. This is targeted high, and this is the next protected low because this also took out another low as liquidity to make it very protected. So took out this low as liquidity, you can see, and price mitigates. So I have this as liquidity here, took out this as liquidity, and boom, broke this high. So I continue until market change here. Now market has another description in this bearish trend. So in this bearish trend now, protected, what do we have? Protected, targeted highs. We now have targeted lows and protected high. So let me bring one here. So I have it right there. Okay, so this becomes, I just want to bring one here so that I can be able to explain. So this becomes normal protected on the bearish trend, it becomes targeted low and protected high. So you see the difference now. See the difference now. In an uptrend, we have targeted highs and protected low, but in a downtrend, we have targeted low and protected highs. So this is how you label it. You can use those dots, and you can also use this callouts so that you have a view of what you're doing. So if I'm going to have a lot of this, you know how my chart will be a little bit messy. Just try as much as possible to make it clean so that you can see what you're doing. So protected, targeted low. This will always be my target when I find my supply. These are my targets. If I find my supply here, this is my target. If I find my supply around here, this low is my target. If I find my supply, these lows are my targets before price move. So this gives you a take profit and an entry. It gives you where to enter, it gives you where to target, because this is what the industries are also targeting. So the last one, which is what, how to find a valid supply or demand zone. How do I find a very valid supply or demand zone? A valid supply or demand zone must have these characters. Let me pull it out. Good. Um, okay, let me come here and use this as an example. Good. It's enough. It's enough. Okay. Valid demand. This same applies to supply. So whatever I'm writing here also applies to demand. One must collect liquidity. Two must change the character or break market structure. Three must have impulse. Four must have imbalance or fair value gap. Fair value gaps. So I think this is the four for now that I can remember. Yeah, these are the four I actually looked at for. Must collect liquidity. The same thing applies to supply. So if you are using this same analogy, you should also know that it applies to supply also. So don't think I'm just using it for only one. No, it's the same across board. Just that I want it to be, I don't like this yellow color. I want it to be the how do I call it? To be observed. So it's something that you should observe. So let's look into this and see if this is valid. Okay. Now, did this demand takes out? You can write it beside it so that you'll be sure, because at the point you have to be sure of what you are doing. I won't lie. There has to be, your confidence level has to grow, even if the market takes you out. But you should know that, okay, I'm sure of what I'm doing. Even if the market takes me out, I'm positive about it. Okay. So this takes out this liquidity and change character. Now, do I have fair value gap? Impulse? Yes, I have impulse. Big candles. Look at this big candle here. And look at this big bullish candle here. This is impulse correction impulse. So I have these big candles. Look at these big bearish candles here also. So there is this minor supply or premature supply here also. Why? Because it took out this high and took out these lows. So you have to be of both ends. You need to put all this in place so that you know where to look out for. But because we are in a bullish market, I'm not really interested in this supply. Because why? I know market is bullish, so I'm not interested in it. I'm looking for buy zones because this is the industry target. This supply here is their target. They know that a lot of sellers will be here, so sellers will be waiting to sell in a bullish market and be taken out. So the money from these sellers will be collected by the buyers. Okay, so there is a sell zone here also. So this is my impulse. And where is my fair value gap? I have a fair value gap. This fair value gap here has been filled. So the next fair value gap is from here to this low. FYG, where is it? Or imbalance. We call it fair value gap or imbalance. So before price came back to it, price already have this fair value gap here waiting. So I'm very sure that price will come back and fill up this empty space. I also have fair value gap here, but it was filled. Let's say from this zone to this zone. If you don't know how to look for fair value gap, I'll actually do another video on that so that you can have a view of what a fair value gap is. Okay, FYG. So I have a fair value gap that was mitigated. This candle already broke the first value gap, so this candle also was taken to me as liquidity. So we have plenty of liquidity taken here. Sorry about the multicolor in my chart. It happens sometimes, but I'll clean everything up. So must collect liquidity. Liquidity was collected here. Must change a character or break market structure. We have a change of character and we have a break of market structure here. Okay. So I can have this as BMS buy. So if you go down on a lower time frame to see what this guy mitigates, you see that there is a strong demand that took out liquidity here on this row. This week of this bullish candle has a liquidity taken out. So buyers came back there and mitigate it and pull up. So here too, this is another mitigation on a lower time frame. You will see it. It took out low, took out this previous candle and broke the high. So that is just the continuation of it. So once you see that, you mark them out. Mark them out straight away and look for your entry there. You can set your fee to hit 50% or use your bid box 50% too. And make sure they have fair value gap or imbalance. Either of the two. Fair value gap to me is the same as imbalance. It's just the gap between each candle. Mostly three candles. From this to this is one candle, two candle, three candle. This three candle already mitigates the high. So the high or low of one candle must touch another. So this high, this low here touched it. So we have a body to body and there's no imbalance in between. So from this candle now to this third candle, we have this high not touching this low. So the space between them is called the imbalance or the fair value gap. The market needs to come back and correct before moving up. Okay, let's go back to the topic. Let's see which one I've not talked about. So value supply and demand, I've explained value supply and demand. Targeted and projected, I've explained. breakup market structure I've explained, Choch I've explained. Okay, I think I'm done with this video for now. I just want it to be short so that you can easily view it. I'll add more videos to it to explain in details. So if you need any explanation, please drop a comment, like and subscribe. Alright, see you guys for now. Bye.